This is Tracie Schmidt with the Schmidt Team at Supreme Lending. I am a mortgage loan officer here in San Diego, California, and I am with Patti Gregory, the one and only. And where are you, Patti?
I'm in Laguna Beach, but I lead a team, so we work all over Southern California.
Awesome. Same. So even though we live somewhere, we're usually like remote and work in all different places. I actually can lend it throughout the state of California and
Yes,
multiple other states, which is great, like Florida and Washington, and the list goes on. So, and Patti and I, we wanted to have this call. Kind of, what was your idea of getting this call together with me?
well, I think people just don't realize that there are so many loan options available, and everybody's been kind of dormant through COVID, and the loan products have just expanded so big now, and there's so many options, and I just want to explore those. So people in any situation, there's going to be a loan program ready for you or getting you ready to buy.
Absolutely. So, I mean, this video, it's going to be a little bit longer, but if you are even thinking about buying a home and, you just don't know until you know. So our goal is to just educate you with as much information as we can, and then try to do something like weekly or every 2 weeks about a specific, maybe mortgage product or something that we're seeing in the market, right? That might help potential home buyers. And so we just
Especially in this market, everything is pivoting constantly.
It's changing.
Yeah.
Changing so much. So is there anything that you're hearing that you kind of want me to start with on the lending side that you're kind of hearing from buyers, or any, questions?
I think that what I call them my non-W-2 borrowers and buyers, that's a big market. People that are self-employed, people that don't go to a regular job and get a W-2. And then also the short-term rental market is exploding right now. And there are a lot of options for people with that.
So that's perfect, because I have those couple of programs, and I just wanted to bring something up as well and share my screen with you, because I know that the question that I always get is what's happening with interest rates.
Yes, every day.
That's the big question. So let me see. Can you see my screen okay?
Yes, got it.
Okay, perfect. Let me just move this over, and we'll kind of go over here in the corner. So I wanted to just kind of point out to people, because home buyers are of all ages, right? And so they may, in the last couple of years, heard interest rates and think that was the norm. And
right.
So, which I wish it was.
It's so not the norm, but yeah.
Yeah. So I just wanted to show people kind of an average 30-year fixed mortgage rate over the past 39 years, because it just gives you kind of a really good idea as to when, you're as high as 16%.
It gives it perspective.
It does, because it was such an anomaly because of COVID in 2020 and 2021. And you're hearing now in the market that rates are going up, which they are, and they have. So you can kind of just see as you go down this, I mean, 2012 was really the first time that we ever hit 4%, right? Which, I mean, it wasn't that long ago.
40 years, right? Yeah.
Yeah. And then, in 2018, we were back up. And then of course we came back down really quickly, and that really did have a direct effect, because of COVID, and because that's changing a little bit now. The market shifted, with inflation and, now with import and export and stuff like that,
Issues. Yeah.
Yeah. So, so this is kind of a good example too. And I was having a little bit of fun with this. So, when I was born, the rate was at 9.05%.
When I was born isn't even on there.
So I like it for people to just get a perspective, right, of what this looks like. So it really didn't drop below 10% until.
And those were healthy markets.
Yeah. Until
people still need to buy, people still need to sell.
That's what I'm saying, is like people, bought homes, right? You bought a home. My parents bought a home. I mean, people are still buying, they're still refinancing, they're still taking cash out of their property. And I look at it and it's like, and I don't know if you feel the same way, Patti, where rate's a number. It's about affordability, right? And you talk to your clients about that, about payment.
Well, what payment are you comfortable with? Let's start there.
Right.
And a lot of lenders will just tell people what they qualify for, but that payment is much higher than they're comfortable with. We want people to be happy in their homes. Absolutely. And not house poor. And we want happy clients. So that payment, we will go backwards from there.
Yeah. And that's one of the first questions that I'll ask someone is, what is the total monthly payment all in, right? Property taxes, homeowners insurance that you're comfortable with? Because I can tell you that you qualify for a payment of $7,000 a month, but you know, with your own budget, you only really want to stay at 4,000 a month, right? So we need to have that type of conversation, and it's better to have it with a mortgage lender before you start looking at houses.
100%. I will not take, there's nothing worse than taking people, we don't do it, but I won't take people out to look at houses before we have their price point, because they're going to be looking up here, but maybe they qualify here, and now they're going to be disappointed.
Right.
And that's not the way to do this.
Yeah. And what I'll try to do for your clients, Patti, is, give them ideas. Here's an adjustable rate mortgage. Here's a 30-year fixed. Here's an interest rate, paying points, not paying points. So they really can see, and I give an Excel sheet kind of breaking down, here are the different sales prices.
Well, I'm an Excel nerd. I love that.
Oh, good. Yeah. Here are your payments. Here's how much money you need. And, and then you kind of look around and you pick what's comfortable. And then that's, the letter that I provide, so you can start shopping in the right sales point range. So you could see, obviously, like, that it's gone down. This is an example. And again, I did this, a few days ago, but so on January 6th, the interest rate average was 3.22. So someone listening to this, if they went to go buy a home, and let's say they had a $4,000 monthly payment, just principal and interest, right? Not including taxes.
Right.
They could have bought a house for $922,591 because of what the rate was as of that day. Okay. If you go all the way down here, and we're looking in April, right? The rates jumped up about 2%, $200,000 of buying power.
That is so significant.
Lost. So it's about $100,000 per 1% to keep the payment the same.
And even lower today.
Yeah, and it is even lower today. So this was as of 5/10, and I pull pricing every single day, and it changes so much. But let's just say right now rates are at 5.75. That same $4,000 principal and interest payment gets you to a $686 sales price. So, it's just, again, we have to kind of think of, are rates going to continue to go up? Probably. So the people that are waiting, you could just be waiting yourself out of the market, right? And
yes, absolutely.
So
I have a couple people that got priced out, and we've been working with them for 1.5 years, and yes, they should have pulled the trigger.
Now, have you seen any shift with people selling their homes? Are they on the market a little longer, or like with inventory?
We're not flying off the shelves. We're not having 80 people at open houses right now, maybe, a handful, although I have a new listing this week that we have 20 showings this weekend. But, people we still have a large buyer pool, even though it's not enormous like it was. We still have a large group of people that need to buy homes. Right. And maybe they have to adjust their price point. And we have to help them adjust expectations, but they're still going to get into a dream home. Yeah. And that's what we're after.
Absolutely. And that's what I want to talk about, is some unique ways.
Oh, I love this one.
Some loan programs that we can help people, like you were mentioning, maybe you lost your job, or, maybe you're self-employed and you write things off on your taxes. So
maybe you pivoted and started a new business. A lot of times to get a loan, you have to be in a business for 2 years, and that's at a regular job. So let alone being self-employed. This is going to help a lot of people.
Absolutely. And these are what are called non-QM loans. So as a direct mortgage lender, we have what's called agency, right? Which is through Fannie Mae and Freddie Mac. And those are your conventional loans. And then we have, VA, and we have FHA. We have jumbo products, but these are unique programs where they kind of don't fit that conventional conforming agency type of loan. So the first one is a 3-month bank statement loan. So a lot of investors ask for 12 months or 24 months.
Most do.
Yeah, because it's only 3 months of statements. It could be either personal or business, and they use transfers and deposits to help qualify what your monthly income could be. So you have to be self-employed. Minimum credit score is a 675. And you have to have it owner occupied, and you need 25% down. So you are still going to have some money in the bank, right? Which, if you're having,
gotta have a little skin in the game.
You have to. They're not going to, give you this type of program with 5% down. So, and they go up to a $3 million loan amount.
That's amazing.
And so what I try to tell people too is, these are unique products where you're going to get above market rates. But above market rate's better than no rate, because
it's giving you options.
Otherwise you can't qualify, right? So, so here, investor cash flow. So do you want to talk about this a little bit in your market, what you're seeing and what people are asking you about?
Yes, just the last couple of weeks, this has become a niche and for my team, because for lack of these short-term rentals are cash cows. If you're in the right market, and we will do all the research. I'm actually putting together a workshop for this, but they're very, the loans for these short-term rentals, Airbnb, VRBO, whatever, it's very specific to the property and it's very specific to the borrower. So this is an option for investors, which I love.
Absolutely. Yeah, so it's an investor buying a non-owner occupied property. Excuse me. So there's no income, no job verification. And what they do is they take the projected rents off of an appraisal that we order, and they use that to calculate the DSCR, or the debt service coverage ratio. And the goal really for an investor is to be at 100%, right? So you want your mortgage payment to equal out what you know at least you're going to be able to rent.
Your minimum receipts for rent, yes.
Exactly. And so that amount could go lower. So you could still qualify even if it's about 70% of what the projected rents are. But what they start doing is they start reducing the loan to value, right, that they'll lend. So this particular product, you would need a 20% down payment to start if you were at that 100% of your rent and your PITI payment. So this is something where, if you're interested in this, I was saying, Patti and your client and myself have a call. Just really understand what your goals are and make sure as an investor, this is the right product. It goes up to 2
Right, and put you into the right product, because this is going to be for somebody that's already a homeowner and maybe already has one investment property.
Yeah,
but this is going to be really easy qualifying.
It's on 2 to 4 units. So think about finding that 4-unit property under 2 million that you could use projected rents for all 4 units to potentially offset the payment. And if you're putting 20% down, I mean, your payments, it should be pretty equal. So
it's with rents in Southern California. Yes, absolutely.
Right. So that was a really cool product as well. And the third one I wanted to highlight, and mostly just because of the stuff that we've dealt with COVID and people losing their jobs, but may have a ton of money, in the bank or in investments or 401k or stocks. It's called an ATR. That stands for ability to repay in full. So what that basically means is that you have enough liquid assets to cover the balance of your mortgage loan. So if you have $1 million in liquid assets, you have $1 million mortgage loan, right? Now,
doesn't get any easier than that.
Yeah. And if you still have to put money down, right? It's not 100%, no down payment. It's 25% down on a purchase.
Oh, question. Do they subtract the 25% down from the liquid assets? So do you need
They will
125%?
Because you're coming in close with that money. Yes.
Right. Okay.
So,
good.
So I would say, if you use your liquid for the down payment portion, but you have investments in stocks, they'll take a percentage of that based on your retirement age. And so what I would say for someone in this is, let's just go over, it's interesting. I talk to buyers sometimes and I'm like, what account are you going to use for your down payment? And they're like, well, I only have $20,000 in my checking. And then I'm like, well, that doesn't work. But then all of a sudden they have 30,000 in a savings, and then they have a 401k. So I just tell people, we're not going to use money that you don't need to use, but really disclose your assets, because that helps you even get into maybe a better interest rate product. If you can show reserves and document assets. So, don't be afraid. We're not going to, it's kind of like telling the car guy what you want your payment to be. Right?
Exactly.
And that's not the situation.
That's a great analogy.
Like we're asking because we think that we can help get you something better.
And I tell my clients, I don't want to know your financial information. That's between you and the lender. It's kind of like an attorney-client privilege.
Right.
And I get with the lender and then come back to me when you have a price point and you are comfortable and ready to go. And because that makes them feel a little better. They're not disclosing all of this personal information to everybody. I don't need to know. You do.
Yes, absolutely.
That works.
And when you say, confidential and that's how we do things. So what your clients will get is, and you could share it or I can share it with them, and they're going to get a co-branded mortgage app, Patti, with you and I, that they can download to their phone. And I love this because it's technology on the go.
I love all the tech.
Yeah. So, and the thing is, everything is secure and confidential. You just throw your email in there and you would hit continue. It'll ask you to create a username and a password that's going to be yours and secure. It'll allow you to then apply online securely. That notifies us when you're done, so we know when to expect your documents. From the time I get your documents, honestly, it takes me just a couple of hours to work through the numbers and get the pre-approval going.
And it's so cool that they can upload through the app.
They can.
There's no emailing. It's just so simple and straightforward.
So it's no longer, big attachments. And if you have a W-2 and it happens to be in a folder in your house and you grab it and you take a picture of it, it'll actually upload that directly to your secure account. So
that's so
the
cool.
other thing I love is, I start with people and give numbers and try to educate them. But if you're out on the weekend with them or they're looking at houses, there's mortgage calculators available that they're able to use on their own. So they can really see like, okay, we talked about 500,000, but what if I was at 510 or 550? how much does that change my payment? And they'll have
Right. And how
access
much
to
do we
that.
need to bid on an offer to get their offer accepted? And then also, guys, with Tracie, I have the ability to submit a pre-approval letter once you're qualified at over the weekend or whenever. So there's no waiting. We're
No,
just
so yeah.
getting in there first is really important still in this market.
Absolutely. So sometimes, with big banks and things, they have certain hours, set hours. They may not work on the weekends. And we know real estate lives and breathes on the weekends, and usually when people are home from work. And so, that's one of the unique things of being a direct mortgage lender, where I make my own hours. When a client needs me, I'm available. And, one way to get in touch with either of us would be through this app. So with a click of a button, you can get to our phone number, our text, our email.
Yeah, it's
So
awesome.
it gives people information like, just
And we've solved problems over weekends where the big bank isn't even going to get to their email till Monday afternoon because they've got 80 emails ahead of you. So
Exactly.
it's a game changer for sure.
Exactly. And so is there anything that you want to ask me or add to, to this to help your
I
clients?
think we're good. I think
Okay.
I just want people to know that we're a very seamless team, and everything you need, we're both seasoned. We've been in the business a long time. You can Google either of us. We're going to pop up everywhere. So
Yes.
know you're in good hands, and we're going to get you into the best property with the best loan. We want you happy. Providing value is number one priority for us.
Absolutely. And I would say too, because this video will be all over social media, the younger homeowners, right? So I did something this past week called Millennial Mortgage Monday, right? Because
Nice.
there's a large percentage of millennials that are buying homes, and you may be afraid of what your credit score is, or you don't make enough income. There's ways that we could run credit simulators. We can
I love that.
Yeah, we could build that path for you. So, hey, maybe not next week or next year, but how much money do you need to save in order to purchase a home in the market that you're in?
And she can also tell you specifically what to do with your credit to
Yes.
bump it up. Even when you come to her initially, she'll be able to say, oh, maybe if you do this, we can get you at a better rate and save you money right off the top. So
Absolutely.
there's a lot of spokes in this wheel to help you.
Absolutely. I love that. I love the spokes. I'm a spoke.
Yes.
And you're a spoke.
I'm a spoke too.
Awesome. Well, I know, what's the best way for people to get in touch with you? I know you
Google. I'm everywhere.
Okay. Yeah, same thing. So, Google the Schmidt Team or Tracie Schmidt, and Patti and I really look forward to serving you and being there for you. And, and I know you don't just work with buyers also, if they know of someone looking to sell, you've sold a lot of homes. So
yes, I have sold a lot of homes. Been in the business. I got in the business in the crash. When everybody was jumping out, I jumped in.
You're a brave woman.
Loved it. And I have an amazing team, so we're very fluid. We just closed one in San Bernardino. We've been in Duarte, Laguna. We're everywhere. So and we're very fluid and can accommodate your whatever schedule you have.
That's awesome. Well, it was so great talking with you.
Yes, thank you so much.
I can't wait to answer any questions that your audience may have, and I'll get this out there as well. And have an amazing weekend.
You too, Tracie. Thank you so much.
Awesome.